Let's jump into it today. We've got Warren going after crypto and banking licenses now, specifically Ripple's banking license. I'll break it all down for you. Don't want to miss it. I want to thank our sponsor today, and that is Uphold. We've all been there. Expenses pop up right when the market's starting to heat up. It's not the right time to sell. The last thing you want to do is sell your Bitcoin, your Ethereum, your XRP, or even your stablecoin, USDC. This is exactly why Uphold launched the EXA credit card. When I found out about this, I was blown away. It's an instant line of credit that lets you borrow against your crypto without having to sell. All you have to do is just use your assets as collateral and spend it worldwide using a virtual Visa card. This is the coolest feature I love about this. There are no credit checks, and you can repay on a schedule that works specifically for you. It's the smartest way to stay long in the market while accessing your portfolio's value today. Download the Uphold app and get your virtual EXA card in just a few taps. All right, let's take a look at this first tweet right here. And what I'm showing is Senator Elizabeth Warren questioned the OCC approvals. All right, okay, that's normal. She questions everything when it comes to protecting banks. But this was really tied to the crypto banks. Coinbase, you'll notice the names here, Coinbase, Ripple, and Paxos, okay? That's interesting, but in the letter, if you click over and go to the letter she sent, it says, please provide the full applications, including confidential exhibits. She goes through the 9 that were approved, and who does she put first? Ripple National Trust. This is not in alphabetical order. In fact, there's no alphabetical order here at all. She puts Ripple number 1, front and center. She is clearly attacking Ripple. And this is the thing I'm getting at. This is the concern right now, because there's a lot that is going on behind the scenes around not only negotiations of what's going on with Clarity, but I think now to protect the banks even further, what's going on with the OCC. So to kind of capstone this, let's go to a clip. This is Perianne Boring, and she has a very interesting take on the banks. Take a look.
What is your take on the Clarity Act and where this goes? Do you believe that if, in fact, the crypto platforms do ultimately have the right to pay rewards, people will take money out of their traditional bank accounts and put them in crypto platforms?
Well, I mean, we're not seeing that right now. You can get yield on digital asset deposits at all sorts of companies in the U.S. today. These are regulated businesses. So the reality doesn't match up with the talking points that are being used to slow down the bill. I've really called this stage of digital asset adoption as the mask off phase. The banks have taken their mask off and their gloves off, and they've really come out very forward-facing against the bill, and they really are the last standout in terms of the group of organizations who have yet to adopt this technology, but it's coming. You can't hold back innovation. You can't put the toothpaste back in the tube. The technology is out there. It's going to strengthen the banking system. They're just being very slow and apprehensive to adopt it.
Mm-hmm.
All right, so the point now, I think, is this last-ditch effort, and that is where Warren is being supplemented here by the banking industry. She's going after the biggest, really the biggest potential winner out of Clarity, and I think that's going to be Ripple, and that is why you're seeing Ripple's name right in the front and center. And I've got more that will break this down of why she's taking this approach. But if you look at where the industry is going, it's all going digital. For 234 years, the New York Stock Exchange has been powered by every era of innovation. We've seen the past history of what, in my own era, and that is the era of the internet, what we saw in the dot-bomb era. Now we're getting ready to go to the next level, and it's all going to be tokenized. So get ready. I think that's the thing that we are going to be looking at. And here is Fox breaking this down because there's some interesting points. Take a look.
The birthplace of markets and trading, the New York Stock Exchange, today turns 234 years old. The New York Stock Exchange is embarking on yet its biggest chapter yet, a 24/7 global infrastructure and digital assets platform, pushing into tokenized securities, private credit, mortgage securities, energy markets, AI, and data products, even prediction markets. How will the financial services segment change?
I think what is really going on is that people want access around the world to these markets, but we're globalizing these markets. And what's really good for the United States is it's all happening in U.S. dollars. And it shouldn't be lost on us that when the president went to project the image of the United States to the Chinese, what did he take? He didn't fill Air Force One full of generals. He put in business leaders, many tech that are pushing our technology forward. This is a projection of where, our country is going. It's technology and finance intertwined that are pushing this economy forward.
Right. And China wants those liquid markets. They want to be on the U.S. exchanges, and there are plenty of Chinese stocks that are trading right now. So you're right. This is the deepest, most liquid markets, and everybody wants to be a part of it because of the liquidity.
So there you have it. I mean, the point is that the markets are shifting. The banks already feel like they're being left behind, and I think they are. Then you look at the SEC, they're set to release its so-called innovation exemption. This is going to open up even more, including the surprise move where the SEC is leaning toward allowing the trading of tokenized assets. That means everything. We could see the move that could reshape literally the landscape of the American stock market. That, of course, shifts over to maybe the landscape of the American banking system going forward. But this right here is interesting, and that is this statement. The SEC officially ended its 1972 policy that stopped settling defendants from denying the agency's allegations. So now, if you settle with them, you don't have to say, I can't say anything. No, you can actually say, there was nothing, we did nothing wrong. So Ripple can now say that. This is something would be huge in the sense we did nothing wrong. That's an example of why we're seeing so much pressure coming in from Elizabeth Warren, I think, because she understands where this is heading, and especially with Ripple kind of leading the way. These two rulemakings will serve as a foundation for Atkins' agenda to make IPOs great again. I think this will be interesting. Do we see IPOs start to move in the next era, especially as we see tokenization continue to grow? I think this is all brewing into one thing, and that is a shift in the overall financial system, and banks are in the crosshairs, which is why they are fighting so hard. So all of this gets ready to get active, I think, very soon, especially once clarity goes through. That's the key here, guys. Clarity's got to go through. Once that does, companies like Ripple and many more, we could see a Ripple IPO, especially with this right here integrated in, and Atkins kind of weighing in and giving this pretty much a green light. This is an opportunity, I think, that we will not want to miss in the coming months. I want to go to a clip here. This is interesting because now we're talking about TradFi, traditional finance, versus the 24/7 markets. And I'm not talking about just think about digital assets. I'm talking about now perps, what we're going to see on tokenized assets, securities, et cetera, RWAs, commodities, all of this 24/7. Take a look.
And people need 24/7 markets. Fiduciaries need 24/7 markets and risk management. And when Trump invades Venezuela on a Friday night, gosh, I need to go and mitigate my risk. When Operation Epic Fury starts on a Saturday night, gosh, I need to move quickly. I'm a fiduciary. I want to act in the interest of my clients. So isn't the answer, hey guys, with all of your robustness, why don't you just fix your tech, go to 24/7 and compete?
But there are some structural things that have to happen in order for the integrity of the market to keep pace with the execution side of the market. So, but the payment rails aren't open, the banking system's not open, and so the de-risking of the system can't happen. And so what FIA has suggested is we need to make innovative new steps there. We need to look at tokenization. We need to make sure that the clearing systems are running 24/7 before we go into these markets. Because again, on the first principle ideas, the people we're trying to protect are ultimately the commercial participants that are hedging in our markets. If there is an illiquid market on a Sunday night where a hedger gets blown out because we have rushed too fast to get to 24/7, that's not great for the commercial participant, and we'll lose confidence in our markets. So we are totally in support of getting to 24/7, but let's do it in a responsible way that gets us there, and all the benefits of our markets come with it.
Come to think about this, because he kind of revealed something there that I think a lot of people may not be thinking through, and I'm sure these guys are thinking through, but in the essence of how 24/7 markets are going to work, they've got to have a settlement layer, which is essentially the traditional banking system, right? If retail, which is already trading in tokenized assets, they're not necessarily trading into traditional, finance. They're not going into banks and off ramping. No, they're doing it within crypto. This, though, could shift quickly if RWAs, tokenized assets, all of this, if you're looking for a settlement layer that a bank's got to be involved, banks are going to have to come along with that. Maybe that's why they realize they are literally caught here and in a position between a rock and a hard place because the markets are already moving there. So they're going to have to move fast, or it puts a lot of these institutional players at risk. So I do agree with that analysis that was broken down there. If you look at spot trading for tokenized equities, this is on Solana. Weekly volume just hit a new all-time high. This is crazy because look at this chart right here, the explosion, and this is the beginning. And this is where Solana is starting to dominate the RWA side of things. And I think this is just a pebble that we're going to see in these markets going forward. Tom Lee, of course, goes out, buys 150 million in ETH. And at this rate right here, he's going to become a barista. No, he's not going to become a barista. No, he's going to become a 5% stakeholder by September. Yeah, by September, BitMine will be a 5% stakeholder of ETH, which is the goal they've been going for. And at this rate, we're going to see it. Other things you've got, BlackRock and Vanguard. This was crazy. Buying meme coins. Yeah, that's right. The two world largest asset managers by AUM have now just disclosed none other than BONK. That's Larry and the dog in one place. All right, so let's go over to Fintel just to kind of take a look at this. There is BONK, and of course, you can kind of see the movement right there. If you look at the institutional ownership, boom, January, boom, 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 nice little moves. Now in these 13F filings, you see who's actually making these moves. And I'll zoom in on this for you right here. That's Vanguard. That's BlackRock holding a nice significant amount. And if you look at it by just in general, let me refresh this page for you guys because this is interesting right here. Let me show you something. If you look at this when it's not sorted, look at the ones that are exiting. There's JP Morgan, Citigroup, Wells Fargo, or not JP Morgan, and then even Jane Street, all exiting out, but at the same now, you've got Vanguard and BlackRock going in. Makes you go, what's going on with that? All right, let's take a look at the BONK overview and BONK holdings. You can see the MNAV trading above right there. If you look at the distribution right here, their goal is 5%. You can see it. They are 59% of the way to that goal of 5%. Could this create a little buyback on the stock? I mean, on the token? I don't know. But I am taking a look at this. There's the BONK balance trend. It started really moving back here in August of last year and kind of plateaued. And then we have another bump up here at the end of last year. So interesting times right now as we see this going forward. Let me go to another clip because this goes into consumer sentiment and also how consumers are navigating a lot of these inflation shocks. What do you think they are navigating, good or bad? Put it down below and we'll play the clip.
So I would use a different word. I would use the word nimble for consumers. Consumers have been hit with a number of shocks over the last few years, and they have managed to navigate those shocks remarkably well. And I think it's because the shocks have not been uniform in terms of the basket of spend. So they've had some flexibility in terms of how to figure out where the prices are rising, where they're seeing more discounts, and they're gravitating to where they find the most amount of value. It's pretty remarkable to see.
I like this because she's saying something that maybe financial markets have not been, considering, and that is that consumers are much more savvy in the essence of knowing where to go to get information, knowing how to go in on certain assets. I think digital assets might be playing a big role in this because of their access, meaning retail's access to digital assets. Remember, a lot of these investors in the past cycles did not necessarily have this kind of exposure. And now we're starting to see brand new investors in, Gen Zs, millennials, that maybe didn't even invest in crypto. Maybe that's how they're navigating this going forward. Other shocks that could hit are Fed rate cuts. Or wait a minute, could it be a Fed rate hike? Yeah, that's what they're saying now. Higher odds of a hike than a cut. If you look at it right there, starting to climb. And then if you take a look at the poly market, boom. Look at this, going from what we were at around 13% skyrocketing right there to a Fed rate hike in 2026. What would this do to the markets? Well, we all know that Fed rate hikes are not good for risk, but there may be an opportunity here to enter into a token or a digital asset, or even to a certain extent, some stocks, in terms of an opportunity in buying the dip. So be on the lookout for that. Trump, though, that I think will change a lot of this is going to be around getting out of Iran. And Trump says the Iran decision is coming soon. Middle East countries now asking for a few more days. Hang on, we got a few more days here before you send some attack drones. And he's waiting on a formal proposal. We'll see if this happens next 2 to 3 days. Maybe early next week would be good for Memorial Day, week coming up. Here's the other thing he's got to worry about, and that is midterm elections. And that, of course, is the Senate being lost. Republicans right now edging it out at 53%. Obviously, the House already in Democrat control. But what I'm interested in is this little thing right here. It's the great state of Texas, which is now purple. I do not think that this will go blue, but if it does, it changes situations pretty quickly. And it might even change it pretty quickly because this is a shock poll right here. Tallarico, 45% against Paxton, 45%. Is Texas on the verge of going blue? And if it does that change how many of these lawmakers will propose rules around digital assets? Remember, clarity is just one step. Then you've got all this bureaucratic lawmaking, essentially rulemaking, that's going to be flowing into these agencies. And these get controlled by the party in power. The party in power will have influence a lot of this as we go forward. So keep your eyes out for what could be happening in Texas around the midterms. And that's something that Trump doesn't want to lose. We'll be watching it closely. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.